Welcome to today's edition of Toggle's Daily Video Insights. For any of those who are joining us for the first time, welcome. This is where we look at one of the many insights produced every day by Toggle that highlights a likely driver for a particular stock and the direction of the move in the context of both the economy as well as the stock's own fundamentals. If you like these insights, subscribe to our YouTube channel or otherwise check us out on toggle.global. Today, the focus is going to be on Taiwan Semiconductor. It's a company that many of you are familiar with and has also been quite frequently featured in Toggle's daily briefs. As you can see previously, there was a bullish signal back in December, which correctly then highlighted the rally all the way up until February, where actually then some downside pressures began to develop. And now recently, we've started to get a couple of more positive signs again. In particular, the latest two signals that Toggle has generated highlight that earnings growth actually at this point, if we click on this particular insight, has turned bullish for the Taiwan Semiconductor company. Specifically, what the system is highlighting is that analyst expectations might have gotten overly bearish for earnings growth. And so over 14 similar occasions that the system has analyzed, actually the median outcome subsequently was a rise of almost 20% over the following 6 months in the stock price of TSM. Again, the timeline here is obviously something that is a combination of all these past episodes, so you would better think of it as within the next 6 months rather than after 6 months. The starting point is 113.83, and the red line, if the price action were to deviate substantially from this confidence interval and dip below the red line, this is the point where it's worth reevaluating the thesis and potentially putting a stop loss in place as well. Now, let's take a look at why it might move. The system, as you know, looks at all of these other periods where you've had a similarly bearish setup for expectations. And as you're seeing here, these have, actually you have to squint a little bit, but these have generally coincided with a pretty positive period for this stock specifically. Now, looking at the backtest, you can also notice these are the actual returns for the 6-month period right after each of these previous 14 occurrences. And so what you're able to see that the downside was quite a bit more limited than the upside. The upside occasionally generated returns well in excess of 20% or just below, which is the median return, whereas the downside seemed to have been contained to 20% or less, providing potentially a 2-to-1 or even 3-to-1 kind of payoff convexity. The P&L generated from a hypothetical trade every time this insight had been generated in the past is also quite steadily growing, particularly in recent episodes. It provided, this is what we're seeing here, some of these really, really good returns, really gave it quite a push. Now, this much on TSM today in the daily brief, which if you are subscribed to should already be in your mailboxes. If you don't have one, please subscribe on toggle.global and you'll receive a daily dose of market relevant content. Today, we discuss our latest insights regarding the fiscal stimulus and what the sectors are that tend to do best in the months after the stimulus had been passed, which of course happened just yesterday when the president signed it. Thank you for your attention, and we'll see you again on Monday.